Thank you for inviting me to the SCMP China conference. I'm delighted to be joining you virtually to share my views on the changing geopolitical landscape and the global capital markets, and the role of Hong Kong in an increasingly divergent world. Over the past 2 years, the world has been characterized by volatility, turbulence, and fragile market sentiment. The global pandemic, geopolitics, and climate debate have all dominated international headlines. Heightened by the pandemic in particular, we have seen more inward-looking government policies, border restrictions, growing protectionism, and a rise in nationalism around the world. At the same time, the world appears more polarized. As a result, positions on complex topics like global trade, politics, and innovation often seem binary and without nuance, especially in the news cycle. The debate around decoupling is one such example. Is China decoupling from the West? Is the West decoupling from China? Depending on what day you open the newspaper or check your phone, you will find opinions ranging from one extreme to the other. And in relation to financial markets, am I seeing decoupling? From our unique vantage point in Hong Kong, at the confluence of East and West, the simple answer to that is no. We are a very long way from a decoupling in markets. If we stand back and take a more comprehensive view of the current macro dynamics, we can see that the overarching story is one of increasingly intertwined economies, greater financial connectivity, and ever-increasing symbiotic relationships. While we can expect geopolitics to continue to shape the global narrative, we see heightened interdependency in global capital markets. The capital flows between East and West are deepening and at a faster pace than ever before. So why is that? Let's look at the heart of the story, China. Despite the rhetoric of recent years, China has been opening channels for investment flows both into and out of its domestic capital markets. Some examples include reforms to QFII and our QFII programs that have increased the amount investors can allocate to onshore markets. Steps to widen stock and bond connect programs. Cross-listings of ETFs between Hong Kong and Shanghai. As access has improved, international asset managers are moving into China's financial markets. For example, BlackRock recently became the first foreign asset manager to open a wholly owned mutual fund business in China. Strong flows from international investors into China's onshore markets show how closer entwined China's markets and economy are becoming with global markets. China attracted $142 billion of FDI from January to October 2021. That's up 23% year on year, making China the top global investment destination for corporate investments after the US. US mutual funds and ETFs had $43 billion in net assets invested in China at the end of August 2021. That's up 43% year on year, or $13 billion from a year earlier. International investors' combined holdings of China bonds and equities reached 7.5 trillion renminbi. That's $1.2 trillion as at the end of September 2021. And that is up 30% year on year, and total holdings have tripled in the last 4 years. These trends show that China remains top of the agenda for international investors. While we have seen a slowdown recently, we still expect China to grow at close to 8% in 2021, compared with 5.9% in the global economy. China's growth story is still a very compelling one. And with fast-growing sectors and superior yields, China represents an attractive proposition in a world where investors are searching for growth and yield. A recent Invesco survey demonstrates this. The survey shows that out of 200 institutional investors active in China, 36.5% intended to increase their China onshore allocations, and 39% intended to maintain a stable level in the coming 12 months. Top sectors on surveyed investors' mind included tech, financial services, internet, consumer and renewable energy. But the flow isn't all one way, because China's market reforms have also brought onshore Chinese capital to global markets. Between 2018 and 2021, Chinese residents overseas investments more than doubled from $1.6 trillion to $3.8 trillion. And as cross-border businesses and capital flows become ever more connected, this will result in even greater interdependency between the economies of East and West. We're not seeing a decoupling at all. The facts actually point to exactly the opposite. This is keenly observed in Hong Kong, where AUM in the asset management sector increased 21% year-on-year to $4.5 trillion in 2020, making Hong Kong the largest asset and wealth management hub in Asia. Asset allocations by Hong Kong-based fund managers to mainland China grew 47% year-on-year to $337 billion in 2020. Investments by mainland China investors in Hong Kong domiciled funds grew 18% to reach $2.2 trillion in 2020. As the world becomes more connected, markets closer integrated, and financial flows more sustained, Hong Kong is in a unique position. As a facilitator, conduit, connector, and interface, Hong Kong has a key role to play in connecting China and the world. Hong Kong is Asia's most vibrant international market. It is also the most international city in China and the most Chinese city outside of mainland China, an effective gateway to and from the world's second largest economy and a force multiplier for the country. As a highly competitive and attractive international financial center, Hong Kong is home to open, globalized, and transparent markets, has a robust infrastructure, internationally aligned regulatory regimes, the free flow of information and capital, and a deep pool of talent. Despite all the noise, the city remains a vital regional and global hub, and it is becoming more relevant than ever in today's global capital markets and economy. This positions the city very well for the immense opportunities that lie ahead. Sitting at the heart of Asia's capital markets, HKEX is a major part of Asia's financial infrastructure, connecting the region's businesses with global capital and providing international investors with access to opportunities. Importantly, HKEX's markets have remained resilient and vibrant in recent years, thriving despite a turbulent geopolitical and economic backdrop. We continue to be one of the leading international IPO markets. For the first 9 months of this year, our IPO market raised a record $36.7 billion in funding for new issuers. We are home to the regional tech giants such as Alibaba, Tencent, NetEase, and JD.com, as well as Asia's largest and the world's second largest biotech fundraising hub. And our IPO pipeline is at a record high with almost 200 companies that are waiting in the hopper. Our markets remain deep and liquid. HKEX cash market average daily turnover reached 180 billion Hong Kong dollars for the first 9 months of 2021, more than double the volume of 2019. Our innovative mutual market access programs, Stock Connect and Bond Connect, have revolutionized the capital markets in Asia, successfully facilitating two-way capital flows in and out of mainland China. Both schemes have been going from strength to strength, setting new records quarter after quarter. Our investor base and product ecosystem have also grown, reflecting our position as Asia's trading, clearing, and risk management hub for global investors. This is increasingly where investors come to trade Asia. Let's take our A-share product ecosystem as an example. Our latest launch, the MSCI A50 Connect Futures Risk Management Tool, combined with our Stock Connect scheme and China A-share ETFs, provides a one-stop solution for global investors to manage their exposure to China. Considering the challenges and turbulence over the past few years, these are significant developments. But we never take our accomplishments and progress for granted. We continue to enrich our product ecosystems, improve our processes, and strengthen the diversity, breadth, and depth of our markets to make us more attractive, relevant, and competitive to investors, to issuers, and risk managers all around the world. HKEX has the future firmly in its sights. We're leveraging our unique role as a super connector between East and West, facilitating international investors' access to China and vice versa. The opportunities are big. Notwithstanding those opportunities, the road ahead is not a straightforward one. In the current climate, I am absolutely convinced that the world needs more connections, not less. And as an East-West super connector, HKEX has a clear role to play in driving the connectivity needed for the next stage of global growth. Leveraging our China advantage and expanding our international coverage, growing our global capital raising franchise, and creating a platform that embraces megatrends and opportunities such as data, green finance, alternative investments, and digital assets. In many ways, stock exchanges are the original flag bearers for sustainability. We are the economic infrastructure that underpins the long-term health of our economies and societies, creating the vital connections that fuel ideas, businesses, and jobs. We see ourselves as a market of the future, and it's a job we take very seriously indeed. This is a special time in history for Hong Kong and for HKEX. If the past 2 years have shown us anything, it's that despite the headline tensions we read about over our morning coffee, reforms have continued to progress, and international investors are becoming more closely integrated with China's market. I don't believe that trend will change. Rather, I see it as the beginning of a wholesale transformation in global markets. Hong Kong has a major role to play in that. A trusted home facilitating the world's insatiable appetite for more connections, not for less. And by supporting the fast-evolving, interconnected global capital markets of today, We're playing a unique role that extends beyond our own business in creating our shared sustainable prosperity of tomorrow. We're promoting connectivity and understanding between companies, countries, and markets. We're looking to fund the businesses of the future. We're channeling capital to support growth, ideas, and sustainability. We're creating jobs and helping in the COVID recovery. We're committed to be the marketplace of the future. Thank you very much.